Yeah, I'm recording now. So on Wednesday, we talked about the market maker method, where I was showing us these templates and the properties of the template. So just a recap, a clear recap. I told us on Wednesday that this you see right here in front of you is known as the Beat the Market Maker Method template, BTMM template. Now, this has a lot to do with revealing the moves of the market makers. It has a lot to do with revealing the moves of the market maker. It makes you to understand their moves and understand what they are doing and what they are about to do. All right. Now, it is very, very good to note that there are some tick lines and there are some dotted lines in this platform. There are some spaghetti lines too in this platform. There are some sun kind of indicators too on this platform. And there are some RSI, volatility band, moving average, and all that, otherwise known as TDI on this platform. All right. So it is good to note that these major lines, the dotted lines, the in-between dotted lines are very important because these are places where the market definitely reacts and move away from. Is either they move through it or they move away from it. Is either they move through it or they'll do what? They move away from it. So I was telling us that between this line and this line is 100 pips. Between this line and this line is 100 pips. Why did I know that? This is 12900. Sweet spot number, psychological number, quarter point, whatever you can call it. 1900 line. Then this 130000 line. So you can see that the difference between the two is 100 pips. And half of 100 pips is 50 pips. So from here to here is 50. You see 129500. So it is very important to note you have the 100 quarter points, 50 quarter points, and 25 quarter points. This is between the 50 to the 100 to the 100. Between the 50 to the 100, you have this. You have this to be 25 pips. So from here to here is 25 pips. All right. From here to here is 25 pips. So you should always take notes. Now, why these lines? These lines are major areas where orders are being placed. The market has a way of responding to all these psychological zones. They have a way of responding to all these psychological numbers before making their moves. All right. So it is good you actually pay attention to those. So we have here, we have the moving averages. You can see multi-MA 5. You see the yellow one is 5. Then the red one is 13 EMA. This one that has aqua color is the 50 EMA. Is the 50 EMA. Then this is the 200 EMA. And this is the 800 EMA. Now this 800 EMA shows you when the market sentiment has changed. If the market is above the 800, you should know that we are in a bullish market. If the market should go below the 800, you should know that we are officially in a bearish market. All right. But you should also know that you need to put this together with a little of technical analysis, that is price action, because these are still lagging. All right. But yeah, it has a way of helping you to stay on your trade longer. It helps you to stay on your trades longer. All right. So the TDI, we have the volatility band, we have the RSI, we have the signal line, we have the market baseline. Now the RSI is the black line. The RSI is the black line, while the RSI is the black line, while the red line is the signal line, while the yellow line is the market baseline, and this other aqua color band is the volatility band. Volatility band has to do with when there is liquidity and when there is no liquidity. Then the market baseline has to do with sentiment. What is the sentiment of the market? Are we buying? Are we in bullish? Are we bearish? All right. Then the signal line and the RSI, it's more like an entry indicator. Once the RSI, that is the black line, goes below the signal line, it is a signal for you to sell. Now, once the RSI goes above the red signal line, that is an indicator for you to buy. So you can practically just base on this indicator and you will be successful in this business. So here we have the 84.86 and we have 23.33. This region is the oversold region, and this region is the, this region is the overbought region. This region between here and here is the overbought region. Then here is the oversold region. I am going to give us a textbook on this so that you can actually study it more. Right? So yeah, I use this together with price action to know what the markets have been doing or what the market is doing. Never forget to to analyze your pairs. Never forget that. Never forget that. Never forget that. Never forget that. Always make sure you analyze your pairs and use price action. Okay? And you use what? Price action. So the EMAs are also entry indicator, most especially the 5 EMA and the 13 EMA. That is the mustard and the ketchup. The names are, the yellow one is the mustard, the red one is the ketchup. This aqua is what we call water. The 200 is what we call the mayo. Then the 800 is what we call the blueberry. So this can also be an entry indicator. If you look here, you see where we have the yellow go above the red. That is an indicator to buy. Now, but you see here that here already the TDI has given you an entry signal right at this point. Because remember I said, when the red crosses above, when the black crosses above the red and stays above it, it is a signal to buy. When the red goes above the black, it is a signal to sell. That is when the black goes below the red, it is a signal to sell. When the black goes above the red, is a signal to buy. If you are following me, type a 111 on the chat box, please. Okay, cool. Let's continue. Nice. So let's analyze this pair. You know, we were looking at it to sell. We are actually looking at it to sell before they actually used this candle yesterday to fake us out with the buy. Though it's respected structure. This is on daily time frame. Let's look at 4 hours. So you see, the markets took out this low. The market took out this low here, giving us a high, giving us a lower low here, and giving us a higher high here. So automatically the market is in a downtrend. All right. So, but look at what happened to this sell. If you were in the chart, nothing would have made you not to take this sell. Reason: price action, number 1. Then number 2, order block. Then number 3, psychological hold number. Then number 4, market structure. The structure was never broken. Because here is equal highs. You have the first touch, second touch, and third touch. I said number 1, we have the H4 order block. We have price action, a clear pin bar, a clear pin bar. This is a clear pin bar, followed by a bearish candle showing you that this is a what? An evening star. An evening star candle formation, evening star pattern. All right. And what happened? We have a low here. Instead of having a higher low, sorry, a higher high, we now had a lower high, giving us a lower low and a lower high. Now, all these highs here were what? Equal. And at this point, a psychological whole number was rejected. How do I know that? Did we see that? Did we see what they did here? Did you see what they did here? They came at, remember I told you, from here to here is 100 pips. From here to here is 100 pips. So this was a psychological whole number at this zone. You see how they broke that zone. And what did they do? They came and rejected this price point. What is this price? This is 132.750. They rejected it clearly. What did the TDI also do? The TDI crossed. TDI crossed. Now, another thing you should note in the market or in the TDI is whenever you see this RSI going out of the band and inside the band, that is a very good signal. A very good signal to either buy or sell. In this, we call it shark fins. We call it shark fin. Blood in the water. Blood in the water. That is outside the band, inside the band. Outside the band, inside the band. Shark fins are very good indicators to look for. Most especially these sharp ones. All right, these sharp ones. Then also another thing that the TDI does is it gives you what we call divergence. So you can also use divergence to note price rejection and retracement. So I was analyzing this. I said, you see how they rejected here? They rejected this zone. And if you check in your chart, you see that you have a H4 order block. You have a H4 order block. You have psychological whole number. You have evening star formation. So why wouldn't you sell this pair? Actually, this pair dropped from there to here. It dropped for 96 pips from where the entry signal gave. Some people can enter from here if they feel, those who are aggressive traders, and they will book 108 pips for themselves. 108 pips for themselves. So I believe we have read the book, right? I believe we have read the book. And tonight, I don't really want to stress this class. Me, I'm very, 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 very tired, but I have to show up. I have to show up regardless. So on Sunday, we are going to do market analysis. Everyone here should find a pair that you are going to analyze on Sunday. Each and every one of us is going to have one pair that you are going to analyze, and after analyzing that pair, you are actually going to follow it. All right? So yeah, I'll stop recording now. Oh, okay, let's continue. Does anyone have any question, please? You can raise your hand so that I will unmute you. If you have a question, raise your hand so that I will unmute you. Any question? Question? I'm taking question, please. I'm taking question. Ask me questions. We have not started teaching about strategy on this. We have not started teaching about, I have about 3 strategies that I will teach you on this. 3 strategies that I will teach you on this. So it's just familiarizing with the interface. Remember the last class I told you all these points, last week's high, last week's low, they are very important place to note. See Monday, see Tuesday, see Wednesday, see Thursday, see Friday. All these are Asian range. They are Asian range. The Asian range. Asian range is very, very important. That is when we are now going to be learning different London patterns. Different London patterns. We are going to be learning about that. So, but now we are just familiarizing with the interface, all right? We are familiarizing with the interface. Say this weekly move, the 3 times ADR has to do with, 3 times ADR has to do with the average daily range. What is the average daily range of EJ? What is the range? Is it expected to move today? We have about roughly 86 pips. All right, so we have average daily range. So 3x ADR has to do with daily range times 3. Each of the daily range times 3. And when it gets to that, there will be a point when the market will do what? Retrace. So questions, questions, questions. No one has a question? Have we been able to read those that book that I sent to the group? Type on the chat box and let me know if you have read it. Do you have any questions from there so that we can treat it? Yes, market maker method. Precious, do you have? Okay, you are not done with it. All right. Okay, no problem. In the access of that cryptocurrency, please, those who have not verified, try and verify. Those who have not verified, please try and verify. All right. Those who have not verified, try to verify. I'm going to send us a brief explanation on what metaverse is. Metaverse is just like is a universe. All right, it's a universe, but that universe is on the internet. All right. Metaverse is a universe. So I'm going to send us some stuff on the metaverse so that you can actually go through it and digest it. So thank you, everyone. Good night. Happy new month in advance. The month of October has ended for us today. God bless you all, and good night.